Hey traders, welcome to Charts and Coffee. Hope everyone is having a good, don't need the echo there. Hope everyone's having a good Thursday morning. Good to see everyone. All right, welcome to Charts and Coffee. We're going to take a look at what's going on with the broader markets quickly before we jump into your questions. So if you got them, type them in. Phone lines are open. First come, first serve, gang. All right, what is going on with the back and forth chop in the S&P? I thought for you volume fans out there, like myself, if you're a fan of volume, as am I, we know that size in trading does matter. And when you take a look at not just 3,800 right in here, but you take a look at standard deviations of volume. It's not always about the anchored VWAP. I love an anchored VWAP. They must be anchored. We don't want a rolling VWAP. But when I take a look at the standard deviation of the VWAP, especially in a neutral, a non-trending market, take a peek here. Very recently, gang, we continue to bounce along right here, which is a -1 standard deviation. It's the V score. And that white line right there represents where the support continues to be. So as we've been consolidating here, we just keep bouncing off that floor. What is a floor? It's support. What is support? It's buyers or bidders. What are buyers or bidders? That's demand, right? So that's, if you're thinking of that and all the different ways that we can describe what support is, this is volume derived support. And this is where we continue to be bouncing off of with the ES. I'm not as interested in the NASDAQ, gang. If I'm looking at the ES, I know the ES has two choices. It could track with the NAS or it could track with the Dow. And this has to do with the fact that the sectors and the stocks weighted in the S&P are a little NASy and they're a little Dowy. And so if we think about what's been happening with the Dow, here is where we have absolutely been bouncing off the mean or the VWAP anchored to the first of the year right there. Take a look at that. There is a lot of support there, much like the -1 standard deviation ES. This is the mean on the V score. And if we are going to continue to move higher in the Dow, in the S&P, that really should act as the floor. And not to leave the NAS out, but take a look at the NAS. I don't really have any of those things working for me all that well. And I think the edge to the upside in the NAS is probably the least viable. So why would I focus on a symbol that really doesn't have structure? I think that's, if there's anywhere for a lot of traders where the wheels fall off the wagon, it's prioritizing symbols that simply don't represent an edge. And structure is the ultimate edge. The last symbol that we're going to take a look at before we jump into the questions, are we going to see a bounce in the ZB? Because, gang, lower yields, which means a higher ZB or a higher TLT, if that's the way you want to trade the long bond, that is bullish for equities, right? That's just simply the way in which stocks like to move. Lower yields are bullish for stocks. Lower yields are an uptrend on the ZB. So what was once a brief uptrend here on these futures contracts has gone neutral, but this is bullish neutral, gang. So let's keep an eye on that. All right, so time to jump into the questions. As always, thank you for them. Let's go ahead and start at the top. Kevin asked, do I have a portfolio daily loss limit? If so, what percentage is that level? So Kevin, I have a per trade percentage that I'm willing to risk on my account. I will say it's really not a percentage that I want to focus on. It's, for example, if I'm day trading, if I have 3 losses that day, it's kind of like baseball. I clearly, 1 loss, no big deal. 2, it's got my attention. But if I have 3 losses, I'm out. And it doesn't matter the percentage I've lost. I might have been working a 2, 3 account percent risk, maybe five. The percent's less important to me than the fact that, especially when I'm day trading, I clearly don't have the pulse of the market. So it's time just to say, you know what? A day trader's best friend is the next session. We can move on. And so to me, it's more a matter of how many losses I've taken. But each loss does have a limit. And that's that holy grail that I teach in the Sector Secrets Mastery, which is how much of my account am I risking per trade? And for day trading, we tend to say, hey, look, we could be on the mid to upper end of that range. So it's really the number of losses. All right. Thanks for the question, Kevin. Great question. Anything that has to do with risk, right? That is the holy grail, gang, because the holy grail when it comes to risk and position sizing is it. There's lots of ways to make money in the market, but frankly, there's really only a few ways to lose it. Focus on how you're losing and fix that. That's the best upstream. If you're looking upstream to why your account isn't growing, it's going to be position sizing. It's going to be stop loss placement. So to me, lots of ways to make money, very few ways to lose it. Focus on that smaller pool, fix that, and it should map to better results. So I love the question, Kevin. All right, Jose, I noticed that there is an hourly price movement range on the daily time frame. It's actually a daily price movement range. So we have PMRs, price movement ranges. They're historical volatility based, well, actually time and historical volatility based levels that I calculate. So these are something that I do. It's a process that I created. It's custom to the way I process volatility and time together. So there are HPMRs that you'll see on my shorter term time frames. And then there's a DPMR. So H stands for hourly, D stands for daily. And yes, I do have DPMRs. We're getting ready to pull this out of Raghee Labs. It's been in the labs for 6 to 8 months now. And yeah, we're getting ready to unveil these pretty soon. They're testing well, as you can see, the way the support and resistance is behaving. And yeah, they're just about ready for prime time. Not quite yet, though. We test thoroughly before I ever release any kind of indicator. It's usually going to be the low end is 6 or 8 months. The upper end is usually a year plus. So we test these thoroughly before we release them. Thanks for the question, Jose. All right, Prince asks, could I take a look at rum? Is there a floor in sight? Well, let's start with structure. Yes, let's start with structure first. And was it rum? RUM. Okay. That's not to like about rum. Um, all right. Is there a floor in sight? The simple answer is Prince, no. I'm not even going to think about, again, what's a floor? Floor is buyers. Buyers are bidders. Bidders are demand. I don't see support. Not, and I can't even begin to talk about that within the context of a downtrend. Path of least resistance most definitely would be down. This is a pretty young stock too, right? So I would anchor a VWAP on, as I like to call it, the born on date. What was the first day of trading? The IPO, DPO, whatever that was for RUM. I don't know much about this symbol. But whatever the IPO or DPO was, anchor a VWAP there. Also, find out what that quiet period is, and then find out. So quiet period. So there's two things with a new stock. Again, I know nothing about this. I'm just going to presume it's relatively young since I don't have that much data before September 19. And I'm not an IPO DPO player, so let me just put that out there too. But there's a quiet period where the company, the brokerage that brought this public, can't talk about it, right? And then there's also a holding period where the insiders have to hold their options and so forth. Know when those two dates are, because dramatically we'll oftentimes see after the holding period, we'll see some weakness because they get to cash in their lottery tickets. And after the quiet period, we're going to hear a lot more PR, the PR machine at work. So know those dates. I think those are far more important than the anchored VWAP on that first trading day. All right, what are my settings for the slow stochastic? Oh, sure. So the best way to do this, let me just pull it up on Toss. And there's a slow stochastic on just about every platform on the planet. And so let me show you what it looks like. All right, so this is a slow stochastic. It's got to be slow, gang. And these are the settings. Please make the overbought 80 please make the oversold 20. There's a couple different defaults that are popular, by the way. Sometimes you'll see a 30 or a 25. Sometimes, and these are just popular historical levels that I've noted that are defaults. Sometimes you'll see on the upper end a 70 or a 75, but I prefer the 80 and the 20. Okay. So modify that. And then the K is going to be a 21. I slow this thing way down, which is unique to the way that I set up a slow stochastic. Most people use far shorter stochastic levels, 7, 21. You can see the default here on toss is 10. No way, too short. All right. And then the next thing I want to do is slow the, I'm going to, there you go, 3D. So slow the K down. There's your D. So it's a 21K 3D. One thing that I also like to do is I'll make this exponential. I use exponential moving averages. My stochastic is going to be no different. This means that more recent price action is weighted heavier. I'm a big believer in that recency bias. And then lastly, do you want to show the breakout signals? That's something you can do on toss. If you want to do that, put little cute little arrows on there. Slow K, slow D. That's the slow stochastic that I've been teaching for about 20 years. It just works. So 21K, 3D, 80, 20, exponential. That's it. All right. Hope that helps. All right. Next up, hello, RH. Just watch your NQ video from yesterday. Oh, right. The free video. And by the way, if you didn't check that out, or if you want to check that out, you can find that over at the Simpler Trading YouTube channel, likely the channel that many of you are on right now. If you're on my YouTube channel, Raghee Horner, head on over to Simpler Trading and you'll see the one setup, one trigger video from yesterday. And these trades are only in my mastery or also in the day trading or futures room. I'm not a part of the day trading room. Yurka, I hope I'm pronouncing your name right. You got to tell me how to pronounce. I've seen you in the charts and coffee. You got to tell me how to pronounce the last name too. If you could spell. I'm just curious. I've grown up with an unusual name my whole life, so I'm always interested in other folks who. All the other kids used to get pencils. Do you remember when you guys were young? There'd be pencils and everyone's name would be on it. I could never find a Raghee pencil. Never happened. Never happened. All right. So are these trades in my mastery? Yes. I'm in the futures room Tuesday and Thursday, and I'm in the mastery Monday through Friday. So it just depends on what day, right? And I'm not a part of the day trading room. So there's a lot of different rooms at Simpler, agreed, but they're all designed to serve traders that are looking for a certain approach, right? So whether your approach is following a certain trader like myself in the Sector Secrets Mastery, or you want to focus on options or futures or the short-term day trading, right? We really try to segment out so people can get, exactly what it is that they want. So that's where I'm at. My main room is the Sector Secrets Mastery, and I'm also in the futures room. Yes. All right. Next up is, and thanks for the question. And yes, that one was in the mastery. So yesterday was what? Wednesday. So yes, that was in the mastery yesterday. I've been having an awfully hard time trying to figure out what the heck day of the week it is, especially when we have a Monday day off. I don't even know what day of the week it is. But yes, so Monday. All right. Hey there, Off-Road Bear, ZB. Yeah, we were talking a little bit about ZB. Absolutely. If we're looking at the way in which ZB has been moving, right? In terms of the support that we could be running into. I don't think we're quite oversold just yet. Let me show you why. So first of all, here's a really nice automated Darvis 2.0 or 3.0, whichever one you're using. Here's a nice layer of support. What's support? Support's a floor. Support is buyers. Support is demand. Whatever you want to call it, there's your support level, right? And then I'd also like to see the stochastic, which it is now. This is oversold. Awesome. And this is a neutral environment. And in this case, I would look at this as potential support corresponding with price and a price-based indicator, the slow stow. Add some volume for more depth. go beyond the price factor, start looking at the volume factor, and we could see whether or not this is no longer a trend following entry, but we could see whether or not it's time to look at this from the standpoint of an oversold buy. V score is not yet in play, but price based indicators are. And remember, bonds are also going to move in terms of the movement of Federal Reserve, can't talk this morning, more coffee. Federal Reserve monetary policy. If they continue to be less hawkish, that is the path eventually to rate cuts, and that's going to keep bonds moving higher. All right. Okay, next up is thoughts on XLE. Hey there, Captain Jane. Thoughts on XLE. Let's stick with the volume max layout. And what do I have here? A pretty decent bounce around the +1 standard deviation. This is a choppy market. So now I'm going to ask myself, all right, where is support in terms of a stochastic? We've already bounced off that. Isn't that interesting? So we went into a neutral market. Take a look right here. And then here is our support via Darvis. Cool. The first bounce, gang, I'm not going to presume I'm going to guess the first bounce, right? But I know I'm looking for an oversold buy. The second bounce becomes actionable, right? There's something I can do with that. And then I ask myself, am I still oversold on the stochastic? And is it still a neutral environment? Absolutely. So that's the way I would look at the XLE on the daily time frame, Captain Jane. All right. Jay asks, are there any books that I recommend to better understand macroeconomics? I like the oh gosh, what was it called? I'm totally drawing a blank on the name of the book, but it's a book. It's a pretty short book about where Japanese monetary policy has taken Japan, and it's got the word macroeconomic in it. I'm trying to remember what the name of the book is. I'll have to find it on my shelf. I can't see it at a glance. Let's see. And that's the only book that I've read that I find even the least bit interesting. There's another one called The Fed and Lehman Brothers, which was very specific to the financial disaster and monetary policy and decisions. What the heck is that name of that book? If I remember, I'll let you all know. Here's what I will say about macroeconomics, gang. And Jay, when it comes to macro, the main thing I have found that served me best is remembering whatever the Federal Reserve thinks is important macroeconomically. Most people confuse macroeconomics with headlines. What I see a lot of traders discuss as macro is laughable. If the Fed doesn't care, neither do I, right? And frankly, the only macro that matters, my friend, is whatever the Fed says, because what they say is the reality of the monetary policy. So I don't want to front run them. I don't want to play a game of chicken with them. I just want to understand what they're looking at, jobs, inflation, growth, and get an idea of how their opinion might evolve. So that's the way I look at macro. I'm trying to remember what the name of that book was, but I don't see it on my shelf. It might be on my other bookshelf. But yeah, I'll see if I can't find that one. But yeah, study what the Fed watches and cites. That's going to be your best view of macro. All right, next up, do I view 5-minute chart similar to that of a daily, trying to learn day trading? Mr. Walker, I view structure with the same tools, to your point. I view price movement ranges. Obviously, I'm going to have PMRs on a 5-minute. I'm going to have PMRs on a daily. I'm going to look at, again, structure, overbought, oversold, the grab candles, the wave. Probably the most important distinction is time when it comes to the 5-minute versus daily, because the time of day, the sensitivity to the time of day, whether that be that day trading rhythm or whether that be economic releases, it's more intense on a 5-minute chart for sure. And then we have phenomena like the opening range, 9:30 to 10, the initial balance range, 9:30 to 10:30 Eastern. We have the lunchtime doldrums, We have the final hour of the day. We have the Fed candle, right? There's a lot of different nuances that happen on a regular basis, intraday rhythms that don't necessarily play into decisions I'll make on a daily time frame. So I hope that makes sense. All right, gang. And just like that, I think we got one more question on Tesla. Sure. And the question is, has Tesla turned into a bull run? Gosh, no. Oh, gosh, no. Yeah, let me show you. Well, so let's take that and we'll kind of wrap it up with this. You all know what I'm looking at. Let's start. And this is a really great place to talk about structure dictates strategy. By the way, I'm not going to look for any kind of strength in some of these just absolutely beleaguered, hammered, whack-a-mole downtrends until mid month January. This is a downtrend, gang. It's a really persistent one. This is still red grab candles, red multi, right? This is just still, frankly, a bloodbath. That little candle, oh gosh, where's the strength here? We haven't even taken out a higher high in, gosh, since when's the last time we made a higher high on the candle that preceded it? Barely on the 16th. I wouldn't even count that. So last time we even eked out a slightly higher high than the previous candle was the 9th. Okay, this is an absolute mess. Please do not go bottom picking. Not yet. Now, you asked me, say, first or second week of January, different conversation. But please don't go bottom picking here. I think a lot of traders have and have got absolutely steamrolled by what has been the movement lower in Tesla. So this is a downtrend, gang. Path of least resistance is down. Bottom picking season, mid-Jan through February. All right, gang, that's it for me. I will see you all tomorrow, same time, same station. Be good to each other. And until then.